Second.
Good morning to all. Myself, Dr.G.Swarnalatha, Assistant Professor. The subject which I am going to take is direct tax. The topic which I am going to deliver is canons of taxation. Now we can see the meaning of direct tax. Direct tax is a tax which is paid by the person individually. He is not able to transfer the taxes to other person, so he has to pay the taxes to the government. For example, we can say income tax, real property tax, personal property tax, and taxes on assets. Next, we can see the topic canons of taxation. We can see the meaning of canons of taxation. It means characteristics or qualities which a good tax system should possess. Canons of taxation are related to the administrative part of a tax. Adam Smith first devised the principle of canons of taxation in 1776. Even in the first century, Smithian canons of taxation are applied by the modern government, which imposing and collecting taxes. Next, we can see the first type of canons. It is a tax which an individual has to pay, should be certain and not arbitrary. According to A. Smith, the time of payment, the manner of payment, the quantity to be paid, that is, tax liability, ought all to be clear and planned to the contributor and to everyone. Thus, canon of certainty embraces a lot of things. It must be certain to the taxpayer as well as to the tax levying authority. Not only taxpayers should know when, where, and how much taxes are to be paid. In other words, the certainty of liability must be known beforehand. Similarly, there must be also certainty of revenue that the government intends to collect over the given time period. Any amount of uncertainty in these respects may invite a lot of trouble. Next is equality. Canons of equality states that the burden of taxation must be distributed equally or equitably among the taxpayer. However, this sort of equality robs of justice because not only taxpayers have the same ability to pay taxes. Rich persons are capable of paying more taxes than poor people. Thus, justice demands that a person having greater ability to pay must pay large taxes. If everyone is asked to pay taxes according to this ability, then sacrifices of all taxpayers become equal. This is essence of canon of equality. To establish equality in sacrifice, taxes are to be imposed in accordance with the principle of ability to pay. In view of this, canons of equality and canon of ability are the two sides of the same coin. Next one is diversity. Taxation must be dynamic. This means that at a country tax structure ought to be dynamic or diverse in nature, rather than having a single or two taxes. Diversification in a tax structure will demand involvement of the majority of the sectors of the population. If a single tax system is introduced, only a particular sector will be asked to pay the national exchequer, leaving a large number of population untouched. Obviously, instant of a tax system will be greatest on certain taxpayers. A dynamic or a greatest uh, tax structure will result in the allocation of burden of taxes among the vast population, relating in the low degree of incidence of a tax in the aggregate. The next one is simplicity. Every tax must be simple and intelligible to the people so that the taxpayer is able to calculate it without, as well as complicated tax is bound to yield undesirable side effects. It may encourage taxpayers to pay taxes if the tax system is found to be complicated. A complicated tax system is inexpensive in the sense that even the most honest educated taxpayers will have to seek advice of the tax consultant. Ultimately, such a tax system has the potentiality of breeding corruption in the society. Next one is elasticity. Modern economists attach great importance to the canon of elasticity. This canon implies that a tax should be flexible or elastic in yield. It should be levied in such a way that the rate of taxes can be changed according to exigencies of the situation. Whenever the government needs money, it must be able to extract as much income as possible without generating any harmful consequences through rising tax rates. Income tax satisfies this canon. Next one is productivity. According to well-known classical economist in the field of public finance, Charles Bastable taxes must be productive or cost-effective. This implies that the revenue yield from any tax must be sizable. One. Further, this canon states that only those taxes should be imposed that do not hamper productive effort of the community. A tax is said to be productive one only when it acts as an incentive to production. Next one is convenience. Taxes should be levied and collected in such a manner that it provides the greatest convenience not only to the taxpayer but also to the government. The next one is Canon of economy. This canon implies that the cost of collecting a tax should be minimum as possible. Any tax that involves a high administrative cost and unusual delay in assessment and high collection of taxes should be avoided altogether. Thank you.